Good afternoon, everyone. I'd like to welcome you to the third session of the EP Africa Knowledge Week. My name is Carlijn Groen, and I'm a portfolio manager for EP Africa. EP Africa provides early-stage grant financing to innovative clean energy projects, technologies, and business models in 15 countries across Southern and Eastern Africa. This project financing is supplemented by technical support, investment facilitation, and knowledge sharing. EP Africa hosted and managed by the Nordic Development Fund and implemented with support from SNV and Open Capital Advisors. Next slide, please. As mentioned, or actually next slide, sorry about that. Yeah, as mentioned, this is the third session of the 2024 EP Africa Knowledge Week. We had two earlier sessions this week on cooling solutions and the upcoming call for proposals. And in case you have missed them, please check the EP Africa website to access the recordings. Next slide. Now I'm excited to introduce today's session, which is on unlocking carbon finance for smaller businesses operating in the energy space. As most of us know, the voluntary carbon market presents an opportunity for clean energy companies to access additional revenue streams and ultimately reach more people with their goods and services. Despite this opportunity, the African carbon credits market has significant scope for growth, having attained only 2% of its full potential to date. Market-related challenges primarily hinder the development of the carbon credits market in Africa. Especially small businesses face disadvantages that restrict their direct access to the carbon credit market. However, innovative approaches are emerging which address these barriers. Today's session will present several cost-effective and innovative solutions emerging within the carbon credits market, catering to the needs to smaller businesses. In addition, we will hear from an energy company's own experience in developing a carbon project. Following the presentations, there will be a panel discussion with the speakers in which we will discuss the different opportunities and challenges the ever-changing voluntary carbon market poses, also in light of recent reports on potential overcrediting and existing carbon projects. We will close with a Q&A. For this, please type your questions in the chat. Time allowing, we will discuss as many as possible. After the session ends, you will see a feedback survey pop up. It would be great if you can give us your thoughts on the session. Next slide, please. So let me introduce the speakers of today. So please turn on your cameras briefly. We have Ryan Ombara. He's a project leader for Open Capital Advisors. We have Dennis Owino-Onono, Associate Director of South Pole. We have Nicole Kugelmas, Director Strategic Initiative and Investment, SunFunder Mirova. We have Nikki Carenza, Manager for 4R Digital. And we have Madre Mena, Director East Africa of Sistema.bio, who is also an alumni grantee of EP Africa. So without further ado, I'd like to give the floor for our first speaker, Ryan Ombara, who will further introduce today's topic. Go ahead, Ryan.
I hope you can hear me now.
Yes, go ahead.
Excellent. Thank you all. So as Carlijn had mentioned, the voluntary carbon credits market is a growing and very interesting space where a lot of companies are beginning to actually invest quite a lot of time, and they're actually able to, as Carlijn had highlighted, grow their revenues, also identify new innovative ways of growing their business, but also at the end of the day, drive impact in terms of allowing more end users and customers to access their products, thereby pushing us forward towards our goal, our overall goals towards achieving a green economy. The work that Open Capital did with EP Africa was to actually survey the landscape, so create a landscape of what the challenges small businesses or small scale clean energy projects face in terms of accessing the carbon credits markets. And we also touched on some of the key requirements that are needed for them to access it. As I'm sure you're all aware, this does give rise to a number of challenges in terms of the scale that they need to reach and the massive cost that they need to incur to actually effectively develop and sell carbon credits. So the work that we did was to look to identify different players who are helping these businesses, who can potentially help these businesses access the voluntary carbon credits market. If we could go to the next slide, I would quickly want to introduce Open Capital Advisors. Open Capital Advisors is a management consulting and financial advisory firm that is committed to Africa's growth and that is also committed to enabling investment across Africa. We were founded in 2010 and are currently a staff of 170 plus, with the team presence in 7 African countries, but having worked across 30 nations across the continent. Of our work, comprising about 1,600 client projects, we have successfully managed to catalyze financing of about $1.5 billion for all our clients. In terms of a personal introduction, my name is Ryan Ombara. I'm a project leader at Open Capital. I've been with the firm for just about 6 years now, working quite extensively across energy policy, energy strategy, and also working with smaller energy businesses, helping them with their investment readiness. If we could go into the next slide. For the project that AEP Africa and OCA did with respect to the voluntary carbon credits markets, we, as I mentioned, we've done a deep dive into the carbon credits space, trying to identify opportunities for smaller businesses to unlock carbon finance or participate in the voluntary carbon credits markets. I believe if you look on the handouts tab of today's webinar, you'll be able to access the full report. What we will be doing today is just covering it at a very high level. So as an introductory bit, the carbon credits, the carbon markets enable sustainable projects to obtain financing, and that is from businesses that are looking to offset their carbon emissions. So the voluntary carbon credits markets is as I mentioned, voluntary platform where carbon credits can be purchased by those who voluntarily want to offset their emissions. And there are different standards that govern this, and we will get into that a little bit later in this presentation. One of the key ones, and one of the ones that we try to expound on a little bit more in this report, is the voluntary carbon standard, that is VERA. With respect to the main types of carbon credits players, there are two main types of carbon markets players. That is the carbon credit producers or project developers, and mostly these are divided into two. That is those who are focused on avoidance and reduction. That is those who are preventing or reducing the release of carbon into the atmosphere through their products, that is predominantly through clean cooking and renewable energy. But we also have removal and sequestration, where programs or projects are initiated or are driven that are focused on capturing or removing carbon from the atmosphere. And these tend to focus mostly on reforestation or, in many cases, direct methane capture. And then on the other side, we have the carbon credit buyers. Now, these are typically larger corporations, many who are based in Europe, North America, or the developed world. But mainly these are countries which have a carbon tax in sectors such as energy, consumer goods, airlines, and technology. An interesting market dynamic is that globally, carbon credits demand exceeds supply by quite a bit. And with this emerging space, there is an opportunity, especially for African and more generally smaller smaller businesses to actually access this market and help meet some of this growing demand. Speaking of global demand, on the next slide, we touch on some of the dynamics that we have witnessed with respect to growth of the market over time. Global carbon credit markets have been on an upward trend, especially in the wake of the Paris Agreement. And in 2021, we had a record high in terms of the total revenue within the space, which was at about $84 billion. We will, however, caveat this by mentioning, and I guess we'll get into this when we touch on the challenges, 2022 was a slightly more difficult year. And I guess some of the challenges that we've seen with a highly unregulated market did impact investor confidence or even buyer confidence. So the global markets did tend to take a bit of a hit last year. However, in terms of the global, in terms of the general global trajectory, there's been a growth of 25% since the year 2014. This high growth was predominantly attributed to the 2015 Paris Agreements, where a lot of businesses are now beginning to comply, or at least embracing the spirit of the accords. And are all looking to, at the very least, transfer that global, engage in the transfer of carbon credits to help reduce greenhouse gas emissions, or at least to push us towards a green economy, as I had mentioned earlier. We could touch on that. If we move to the next slide, we'll now hone in on Africa. And as Caroline had mentioned at the very beginning of this session, the African carbon credits market has significant scope for growth. We are currently just about 2% of its full potential. The major players in this space, as we have on the slide, are mainly Ethiopia, Kenya, Uganda, DRC, and Zimbabwe. These are the largest players at the moment, and these are definitely dynamics that will continue to shift as more businesses and more countries, that is, embrace the voluntary carbon credits markets. What we have seen is that the market exhibits fragmentation, and of course, the 5 countries that I mentioned there account for 65% of total issued credits to date, Kenya leading the way. And in terms of the specialization, or at least how these carbon credits are developed, as I'm sure this resonates with all of us, given that this is a nascent space, especially in Africa, the types of products, or at least the type of projects in which carbon credits are generated is really just focused on a very clustered within a very small range of sectors, that is forestry and land use, renewable energy, and household devices. Moving on to the next slide. There are a number of ecosystem players, and this report does go into a little bit of detail with respect to the interplay between all of these players, with a huge focus on specifically the brokers and financiers when it comes to how businesses can access the voluntary carbon credits markets in an effective and sustainable manner. But in general, we had identified 6 key players and with distinct roles within the entire space, from the project developers all the way to consultants and auditors who help the companies or indeed individuals with developing a strong methodology, or in that, and following on from that, helping them with the credit certification process, so measurement and documentation of the entire carbon credits generation process. Also the standards and registries, and I had mentioned Vera, but there are others such as the American Carbon Registry, Climate Action Reserve, and the Gold Standard. We have the buyers, who are the larger organizations who are looking to buy directly from some of these project developers, or indeed from aggregators who in fact take smaller businesses or take multiple carbon credits from smaller businesses and sell them on the market. We then have brokers who act as intermediaries in terms of buying credits from the developers, and in fact take on much of the responsibility of marketing and selling to the network of buyers for a fee, of course. And then we have the financiers who help to finance the carbon credit registration process, which, as I'm sure a lot of you would resonate with, is actually quite a capital-intensive process. During this webinar, I'm sure that we will have presentations, in fact, from some of these key players. Moving on to the next slide. This is a very basic overview of how all the different, or how the market is structured and how the different players interact with each other. So I would very much encourage you to go through the report as we go into a little bit more detail as to how each of these players interact with each other. As we go to the next slide. And this is something that Caroline had mentioned at the very beginning of today's session. There are market-related challenges that primarily are hindering the development of and the participation of smaller businesses within the voluntary carbon credits market in Kenya, in Africa, that is to say. We divided this across 3 major facets of the market, which is the supply and standards, intermediation and financing, and in fact demand as well. So we've gone into a little bit more detail about this within the report, but just to call out the major thing, the major item here, which a lot of businesses that we spoke to and have continued to speak to as part of the entire engagement with the EP have highlighted, financing appears to be one of the biggest challenges that they face. So there are limited mechanisms that are present to de-risk and enable investment. However, there has been some positive growth in this space, but there's still a lot more work that can be done to encourage businesses, especially smaller businesses, to participate in the voluntary carbon credits market. If we move to the next slide. We did highlight, however, 3 major overarching challenges that small and medium enterprises and energy businesses specifically face with respect to the market. The first one is costs, where the total costs from project documentation to credit issuance and eventually commercialization could end up anywhere between the region of $100,000 and $500,000. For an aspect of the business that would not be the primary form of revenue generation, this can be very tedious and very cumbersome for a lot of businesses. So in many cases, it does not make sense for them to engage if they will spend so much money for limited returns that are in some cases not even guaranteed. Secondly is the scale, and aggregation is definitely one method that businesses have kind of used to get around this, or at least even purchasers themselves have tried to get around. But ideally, a project should be able to generate at least $300,000 in carbon revenue to become economically viable. A lot of the projects that we see from these smaller players, however, do not quite achieve that scale. Indeed, in fact, some of the methodologies that are used are in fact still not particularly sound, or at least need some refinement. So justifying the scale and actually justifying at least in the methodology that has gotten the business to determining the level of scale they would have is still a challenge. So there is quite a lot of scope to help businesses understand the methodologies that are available, or at least develop a trusted and verifiable method of verifying their carbon credits, the carbon credits that would be generated by the projects. And lastly, we have the lengthy and cumbersome process. We go into more detail about the total time requirement when it comes to the entire carbon registration process. In some cases, this could take between 2 to 5 years. Again, as I mentioned, with respect to costs, this is quite a lot of investment for a business that in many cases has more pressing needs in terms of growth, in terms of being able to deal with some of the operational costs, salaries, or utilities, so to speak. So it means that companies have to devote quite a number of resources for, in many cases, minimal or not guaranteed returns at the end of this process. So the incentives are very low for the businesses to actually participate in this. As we go to the next slide, I guess the good news is that there are some players who are definitely trying to bridge that gap. This, however, is, I guess, a very basic understanding of what businesses do have to go through all the way from project documentation until commercialization. As I was saying, as we transition to the next slide, the good news is that there are a number of players who are coming up with innovative methods to help businesses access the carbon credits markets. And we have some of the players that we have highlighted here who will be speaking after me today. In terms of pre-financing, here we have situations where smaller companies can establish financial agreements with buyers or investors, which enables them to secure funding for their carbon reduction projects as they, in fact, deal with the generation and selling, eventually get to the commercialization. In this case, the investors or the pre-financers would be reimbursed for the commitment or the investments once the projects are commercialized. We also have aggregation and consolidation, which I had mentioned, where multiple players get multiple small businesses and help them essentially access the market as one joint carbon credit that's sold on the market. And then we have the disruptive technology platforms who are breaking down some of these barriers and helping make the process a lot more accessible and cost-effective for businesses. So I would definitely encourage you to read through the report because we go through this in more detail, but I'm happy to hand over to our next speaker, who I believe will begin to give us more context on what we have in terms of the different initiatives out there. So thank you all so much. Caroline, back to you.
Thanks so much, Ryan, for setting the stage. Then I'll give the floor to Dennis Obino-Nono from South Pole to give some examples on how South Pole tries to serve smaller companies as well in terms of accessing the carbon markets. Go ahead, Dennis.
Thanks a lot for that introduction and setting the scene. So in the next couple of minutes, I'll briefly talk about South Pole, what we do, our expertise, and essentially how we try to solve the bigger problem, which has been highlighted by the previous speaker in terms of carbon financing and how smaller players can benefit from that. So next slide, please. Next slide. So South Pole is what we call a climate company. And we work with partners, and we say partners, they could be project developers, they could be big financial institutions, they could be governments, to understand their climate needs and how they can achieve their, I would say, their climate ambitions. And most importantly, how they can put finance towards tangible climate solutions. So we do work with to come up with innovative solutions for different companies and different stakeholders. So it could be a large multinational, and it could also be a smaller national or local NGO. So it really differs across. And it could be what we call project developers, who are essentially the people on the ground who are implementing these projects. So the likes of, for example, BAN, the likes of Sistema.bio, or could be an NGO, for example. And we do have quite a diverse skill set. So from scientists who work on specific my audio got disconnected. Next slide, please. So we have representation across the globe, and yeah, so as across, so I'll speak to our impact, and depending on the different projects that we've done with clean cooking, hydro, reforestation, afforestation, and this is just a small snapshot of the level of impact that we've achieved. It's also critical to just mention that as a climate company, impact so far supersedes anything else that we want to achieve in terms of economics. So it's what we can achieve in terms of the climate is what is embedded in our business model, and is what is embedded in all the relationships that we have and we reach out to with our partners. So if in this case will be a small scale business, we really want to understand what are their aspirations, what are their climate ambitions, and how is carbon financing going to be I would say facilitator or an accelerator towards them achieving their climate ambitions. Next slide, please. Yeah, so I've spoken to, we have wide of experience. We have a Nairobi office, we have a South Africa office, and it's quite regional. So depending on the location of where the project is or where our partner is, we are able to draw linkages and to get the best kind of support for our respective partners. So I'll not dwell on this. I'll try to move on to the next slide, please. So this is where I would say our expertise are. The next slide is within South Pole, we are quite, I would say, privileged to be able to work on quite a diverse, I would say, different sectors. So you can see, for example, if it is household technologies, if it's renewable energy, forestry and agriculture, water, innovation, technical, carbon removals, or many others that we've not really mentioned here. And within South Pole, we are able to, it could be different business lines, and we have people who are experts in this. And what we have also is that we are able to do projects from the beginning up to the end. So the different roles that we might play within a typical carbon project is not necessarily just one part, which we might speak in the next. It's also trying to work with our partners from the beginning of the project. Let's say with the inception, where we have a partner who is thinking about a carbon project and they have no idea of how to proceed. So we will typically start that process and that journey with that partner, and look at what their needs are. For example, if it's consulting, if it's financing, and how we can solve that, and then go through the registration process and validation, and then also facilitate the sales, because we do also have quite a big network of potential buyers. So what we really support our partners is technically through the whole journey, is work with them on the different aspects and be able to show them what the end is, even as the previous I would say speaker spoke, was that it's quite a long journey. So in this process, we are able to show them this is the potential outcome, and this is the you can say this is potential exit. So it's something that is quite I would say relevant and useful, especially for companies who've not started any carbon projects and they're quite novice in that, to be able to know that potentially in the next 3, 4, 5 years, they might be able to sell credits at a potential this price. So it's something within the team and within South Pole we're able to provide. Next slide. So I've talked about this. So within South Pole, we have different desks on different departments who are very specific on the different projects. So one project will have different people who are specifically dealing on that. So if we have on the commercial side who are working with partners to look for projects, we work with the technical team, as Ryan has put it, to take through the partner through all the validation and all the certification that is needed. And then we will have a desk and a team that is also really looking at what the pipeline looks like from a buyer's perspective. So that is, as I was highlighting on the previous slide, is something that most of the partners that we've worked with for the last 15 or so years find really useful, and also really, I would say, useful for new companies who are thinking about the carbon market and do not have internal expertise. Next slide, please. So I'll not dwell on this. Can we move to the next? So where we try and bridge the gap mostly. So this is on the pre-financing, as it has been mentioned, which will be on the next slide. So definitely we know that it's a big gap, and not all the companies that are thinking about coming into the carbon space have the initial financing. And in all honesty, they are barely kind of surviving in the current market conditions. And most of these organizations they're not that big, and they're not scalable. So to bridge that gap, South Pole does do strategic pre-finance, and by that we essentially, we are able to assess the organization. We look at the potential of the carbon market, for the carbons that you're able to generate and to implement, and essentially forward you the money, which over the period of time, once the I would say the credits are sold, we're able to recoup our costs, and we're able to also to share. It's essentially like a profit share. So we recoup our costs, and also the company is able to get the money. So it has been something that has been quite useful to kind of, I would say, break the market and opening up to new players, and especially smaller players who would rather otherwise not have the financial muscle to venture into carbon markets. Next slide. Yeah, so this is what I was saying. I mean, and then something to highlight is during this process and that pre-financing is obviously, given the project, there are certain things you have to make sure that it has to be real, additional, verifiable, and quantifiable. But the most critical thing here is that while it's a partnership, and once we know, for example, just like any other investor, we have to make sure that your business is sound. And this is a gap that we've seen for sure, that even before companies do approach companies like us, like South Pole, we have to make sure that they have internal capacities, like their business is being well run. One of the biggest risks that are there in the carbon market is implementation risks. So if we are doing all this planning and we say, for example, in a cookstove project, we'll be able to distribute 100,000 cookstoves in the next 1 year, and for whatever reason it happens that you distribute 10,000, then there's a massive gap, and there are also other kind of commitments that will have been done. So it's also really critical before the pre-finance or anything is done, the company itself has to be well run, and that is a big gap that we've seen. And there are companies that are stepping in to try and solve that with technical assistance, but especially on the carbon markets, but also just to support these organizations themselves internally to be self-sufficient. Next slide. So for key consideration, I would say before, right now, at least in the African context and all over the world, that carbon is the buzzword, and everyone, and almost everyone, is trying to get into it without really thinking through what does it mean. So that's why this question is also there. What is your carbon strategy? So before any, I would say, small organization, they have to really think through 5 years in advance, how is carbon financing strategic in their overall surviving and sustainability of their organization, and how does it embed within their organization business model? Because if it's not something that is quite critical, then you risk, because you have to wait a period of time before you start realizing the benefits. So it has to be a long game, and it has to be very purposely well throughout. And it's not just within the business model financially, but what are your climate ambitions? That is also the most critical things. So again, we have to think of what are your priority technologies, and which regions or countries do you want to play. So for example, there are certain countries, and it links to the regulatory policy and everything. So there's a lot of consideration that you have to think about before even entering into that. And that's why there's a lot of material that is out there to really support in making this decision. Yeah, I can see my time is up, but more than happy in the plenary session to take more questions and speak about more of this on other related topics.
Thanks so much, Dennis. Indeed, I'll give you the floor again to talk a bit more about this consideration, because I think they're very insightful, also for the audience that is here today. But indeed, time allowing, I would like to give the floor to Nicole Kugelbas from SunFunder Mirova to speak about SunFunder Mirova's experiences and services within the carbon market. Go ahead, Nicole.
Hi, good afternoon, everyone. My name is Nicole. I'm director here at Mirova SunFunder. If you can move to the next slide, please. Just a little bit of an introduction to ourselves. Mirova SunFunder is an asset manager. We manage private equity funds on Mirova side, and Mirova SunFunder has gotten acquired by Mirova in 2022. We have over 60 investees, and we focus on financing distributed renewable energy companies across emerging markets. We focus on across sectors, mini grids for the home systems, commercial industrial solar, and we provide long-term financing through 2 current funds that are currently live. Our latest fund has another latest close at 200 million, and we're targeting 500 million for that fund. We're headquartered here in Nairobi. As part of our initiatives in Africa, we not only lend to companies, but we have an advisory unit called the Impact Finance Services team. If you can move to the next slide, please. Where we support the same companies that would be borrowers of Mirova SunFunder and provide them with advice across our corporate advisory services, including CFO services, fundraising, for a number of different topics. And one of the verticals that we are trying to solve is sector initiatives, such as the aggregation of carbon credits. In this context is that we wrote a study which will be published soon for the UNDP, a feasibility study on the possibility of aggregating carbon credits for mini-grid developers in Africa. We recognize the challenges that have been outlined before by Ryan for developers on the one side, but these challenges are across financiers as well and buyers of carbon credits. So we thought this solution would sort of address the issues concerning all the parties involved in carbon credits. If we can move over to the next slide, please. I will outline the solution in a bit more detail. So our intention in realizing that the costliness, the timing taking for developers to get registered for carbon projects, and the scale, generally these being very small developers, was posing a number of challenges, not just for the costliness of accessing the additional revenues generated by carbon assets, but also because for financiers, even if we would want to pre-finance these credits, the scale would not allow. The tickets are generally too small for large lenders, which are oftentimes, with exceptions such as South Pole, the only ones able to take this kind of market risk that you would be entering in pre-financing these solutions. You're of course having to be exposed to the execution risk that was outlined before for the companies, but beyond that, there's a pricing issue, an offtake issue, which we are exposed to in carbon markets. And so with this solution, what we tried to work out was to make it a blended solution for financing. So we would have commercial and philanthropic, as well as foundation and DFIs involved in creating a facility that would provide this pre-financing for carbon credits. What we realized in the process, and sorry, one more point on the stakeholders, climate asset buyers oftentimes require large numbers of credits to offset their own emissions. And so if we wanted to get the better pricing for these credits, it would have to either to be direct without intermediaries to the extent possible, because brokers do charge fees, and that increases the overall costliness of carbon credits. But also because if we were going to do a direct sale to corporates or other institutions that would want to offset their emissions, then they would need scale for those as well. So this solution would aggregate the carbon credits of this very specific sector, which we studied it with the mini grid sector, and create a framework agreement directly with climate asset buyers to sort of address the issue of the off-taker risk, the scale, and the pricing for developers. If we move to the next slide as well, please. As mentioned, there are advantages across for the stakeholders. Within the study that we developed, just briefly to outline the conclusions to give some context around this. The metric where we measured this by was the percentage of capex that mini grids could finance with proceeds from carbon credit sales. So that was the ultimate output that we were trying to solve for. And we find out that as a single developer, via carbon sales, a single developer would be able to cover just under 1% of their initial capex cost. And if we aggregated the solution, and we have a number of assumptions that we drew these results on, just under 2% of the capex could be financed. So it's not as material as we were hoping it would be, but it's definitely a contributor, and there are other solutions that, as a result of these findings, we are looking to develop, which is a more sort of holistic approach to address the challenges for the mini-grid sector specifically. But that gives you some context in terms of metrics. Again, there are some other assumptions that play into this. We find out that with the assumptions that we were running, it was roughly a 9% interest rate on the pre-financing for carbon credits, which of course, is relatively high, and the finding was that if it was closer to around 5%, which would require, of course, more concessionary capital, that would increase and improve the ultimate metric of having a larger portion of the capex covered by this solution. So this is something that we are currently looking to put in place. We have been in discussions with a number of developers, a lot of financiers, and other players in the market. We are looking also to set up, like I said, a framework agreement with credit buyers, just to address twofold. One, the issue of the offtake that lenders require to be more comfortable pre-financing these assets, but also just to ensure that continuity of the facility, right? Because as we've seen with carbon markets, they're fluctuating over time. And so having, one of the mitigants to these sort of movements that we see over time is really having a long-term agreement with a buyer, a single buyer, or a number of buyers that commit to this over time. And likewise, for these buyers, it's important to ensure the quality of the carbon credits. So what the aggregator would do also would establish a minimum criteria for developers to access the solution. And as per normal processes of financiers, there would be a due diligence in place that would sort of have another vetting point for developers. If we go to the next slide, please. Oh, sorry. So I think we had one on the conclusions and solutions and findings that we had of the solution. But I will leave it there for now. For mini-grid developers specifically, we also find a slightly different solution in the form of DRECs, which are other form of climate assets, but we can get further into detail if there's interest in that side for in the Q&A. Thank you very much. I'll pass the mic back to you, Helen.
Thank you so much, Nicole. That was really interesting, especially how you also highlighted the risk for investors. And you spoke about as well the minimum criteria for quality assurance, which I'm sure we'll be discussing further in the panel discussion. For now, I'd like to give the floor to Nikki Carranza from 4R Digital. Go ahead, Nicole. Nikki, sorry.
Hi, Carlene, thanks so much.
Oh, can you? It's not very loud. Just increase the volume.
Yes. Can you hear me? Is this better?
Yeah, better. Yeah.
Okay. Let me go ahead and share my screen quickly. Apologies. Apologies. Give me one moment here. Unfamiliar with this platform.
I know it's a bit confusing. Don't worry.
Did my screen come up there or no?
It did, but we didn't see the presentation. I think you see a drop-down menu when you share. You should be able to click the right panel. Yeah.
That coming up now. Yeah, screen two.
Yep,
okay.
It's here. Go ahead.
Okay, perfect. Thank you. Great to be here and connect with you all, and thank you to the other presenters. It's been really, apologies, just getting to the right slide here. Good to hear, kind of that scene set from Open Capital, because actually took a lot of the content that I wanted to spend time on. But my name is Nikki Carranza. I'm a manager for 4R Digital, and we are a digital finance kind of technology incubator. And we've built a platform called CABEX. It's the Carbon Value Exchange, and it's essentially a digital financing platform for carbon credits. It connects buyers of carbon credits to supply-side projects, and uses technology and data and innovation to drive a lot of efficiencies into the processes by which buyers and sellers are able to connect and transact in this space. And we believe that the value proposition is really relevant for that segment of the market that is the smaller scale projects, projects that are right now not able to access the market because of their scale and because of their size. And we believe that using technology, we are able to capture the data that underpins that carbon asset a lot more effectively, efficiently, and connect those supply side projects directly to buyers and carbon financing markets. So I've started here just around the challenges. I think that Ryan already outlined this, and that's some data that we can start to use that's even more refreshed and up to date. But the key point here and the key challenge that we're tackling in the market is the cost that it takes for projects to access carbon financing because of the intermediation processes that they go through with verification, validation, issuance, and sale of credits, and then the amount of time that it takes to access those markets as well. So I'll explain a little bit. And then, of course, there's a whole host of challenges that are hitting everyone in the market right now around transparency, trust around the provenance and verification of these credits that we feel, technology and the CAVEX platform can help to solve some of those. So just an overview of, kind of already mentioned it a little bit in that introduction, but what we are after is increasing integrity in the markets and increasing impact in the markets, again, using technology. We are using tech and data and remote sensing and, kind of a lot of emerging technologies, learning patterns, algorithms, AI, etc., to drive more market efficiencies in the way that participants are able to transact. We feel that this approach is really relevant in the context of micro small projects, how we categorize them. Can get into talking about that in a little bit more depth. And the overall, kind of goal of this is to maximize the amount of carbon financing that directly reaches projects and even end beneficiaries through things like mobile wallets and technology. I'll hop along here to just, I think a lot of us are very aware of the markets and the challenges and some of the spaces that are opportunities that there are. So to explain a bit to you all about the CAVEX model, we ourselves are not project developers. So CAVEX as a platform partners directly with projects and directly with buyers to connect them using the platform. So on the left-hand side here, what you see is that like I mentioned, it depends use case to use case or type of project to type of project, but we connect directly with a project like a clean cook stove company and pull data directly from their set of cook stoves, bring it onto bring that data, ingest it into the platform, and then are able to quantify that amount of emissions reduction activity that has occurred directly on the platform. And so we're able to use technology to get an understanding and quantification. Then we're able to do verification and validation processes at the system level because what the system is doing is using the established, best known science and methodologies that exist in the market, a lot of them underpinned, as you're all familiar with, by CDM methodologies. But using the system is able to evaluate the data coming in and do the quantification and then run system level auditing and validation processes versus what's happening right now, mostly in the market today, which is batch by batch and project by project. This helps give, kind of an analogy that we think about is that right now, what typically happens is that there's a project will decide and run their analyses, like some of the presenters were discussing around cost benefit return. They will start going through the process of registering as a project, quantifying and forecasting out what they think their kind of credit volume will be based upon their type of assets, business, project, etc. Then start to work with a verification and validation body, do a whole host of kind of a long and timely process around having them go out into the field and capture data, very analog, manual, a lot of it done off Excel spreadsheets at the moment. What we're seeing the opportunity here is that if you can connect up all of the asset level data and pull it directly off of a project's set of cook stoves or set of solar water pumps or use satellite imagery to do above ground biomass measurement with reforestation projects, just using a couple of examples of projects in the market. You could get a quantification and estimation. We then have third-party independent auditing at the system level against the methodologies that have done that quantification on the project, on the system. And then, of course, all of the other nice bits that tech lets us do now. A huge, kind of impactful part of the CAVEX model is that we're able to, once we've done that quantification, we've had the independent auditing, we are, confident and able to issue the pool of credits. We're able to then use digital financing to channel the majority of the proceeds directly back down to project or organizational accounts, or even in many instances down to an individual user's mobile wallet. So that could be, a subsidization of access or to a clean energy asset. And so what's nice is that we're able to time the carbon financing and incentives much more closely to the actual emissions reduction or removal activity occurring. And we kind of feel that this helps one, really increase the impact of that financing by timing it directly, increase access to the market for those smaller scale providers. The hurdle that, kind of they have is around the capturing of that data and working with us. And we've been working with a lot of supply side partners around designing those mechanisms and modes of connecting up that project activity level data. That was the main bit that I actually wanted to cover off on for CAVEX. I think that the proposition, we've been really lucky to get to work with a lot of great partners in this space who have already done a lot of learning. They are, operating at a scale where they have been able to access carbon financing, but they recognize that one of the biggest challenges for them is, as the markets continue to evolve, as there's pricing volatility, as there's uncertainty around some of the regulatory environment, being able to use technology to have a much more assured position around that carbon timing and the cost profile around that to be able to increase the impact of their activities has been kind of a key thing that we found and ultimately drives more equity in the markets as well. Carlene, can I pass it back over to you there? I can stop presenting here.
Yeah. Thanks so much, Nikki. That was really interesting. I'm sure we'll get a lot of questions on how to engage with the CAVEX platform. But before we delve into that, I'd like to give the floor to the last speaker, last but not least, Madre Mena from Sistema.bio. Please go ahead.
Thank you, Carlene. I'll be speaking about Sistema.bio, the work that we do, the impact we've had so far in our journey into tapping into the carbon market. I'll start with our mission. It's to create value from waste. Please go to the next slide. The next one. Okay, the next one. Okay, thank you. As I mentioned, our mission is to create value from waste. We work with smallholder farmers globally around the world. And if there's one thing that every smallholder farmer has, it's organic waste on their farm. But waste is only waste if you do not get value out of it. We have around 400 million smallholder farmers, and this accounts for around a quarter of the population of the world's people. These smallholder farmers, they lack access to high quality technology in which they can tap into this waste and convert it into something of value into their farms. Please go to the next slide.
Madrin, do you mind turning on your camera?
Oh, it's off? Sorry about that.
No worries.
Oh, great. Good, okay. This from the waste that these smallholder farmers have, Sistema.bio connects them with high quality biodigester technology. We have two products from the biodigester. They are able to get biogas, which is for clean cooking purposes, And from the picture on the left, you can see a phenomena that we call a smoky kitchen. Globally, it's been shown the effects of a smoky kitchen. It causes respiratory problems, and it also causes what is known as the watery eyes issue. Biogas is able to replace other sources of fuel that would cause this. That is an example is firewood or charcoal or any other biomass. The other product from these biodigester that we offer is organic biofertilizer. That means farmers are able to reduce their reliance on chemical fertilizers, which have been known to reduce the health of our soil by killing the organic life. The fertilizers also leach into water sources, the water table, and some of them are also washed into rivers. And this causes long-term health complications to people and to the environment as well. Next slide. So how do we do this? We have farmers with organic waste on one side. We have Sistema.bio that has biodigester technology. And we have several problems that we are solving in the world. One of them is the impact of climate change. The other one is how we grow our food so that we make sure we are food secure. We also have a problem of health. This is caused by the smoky kitchens. And when you look at all the problems we are solving, most of them affect women. So there's also the aspect of gender equality as well. So we offer training, we offer financing, and we offer sales and installation services to our end user, who is the smallholder farmer. The next slide. Over time, since 2010, when Sistema.bio was founded, it's been proven that at scale, our technology offers true economic value, and the individual smallholder farmers are able to generate carbon offsets. The previous speakers spoke about aggregation. We have all these individual smallholder farmers spread across the globe, but they would have a major problem accessing the carbon market by themselves individually. So this is where the aspect of aggregation comes in, and Sistema.bio works with them to aggregate the carbon offsets that they generate. The next slide. The history of Sistema.bio goes back to 2010. That's when the company was founded. Currently, we've installed over 95,000 biodigesters across the world. We have a biodigester installed in at least 35 countries, and our major hubs of operations are in Mexico, where the company is headquartered. We also have a hub in Colombia. We have a hub in Kenya, which serves as the HQ for Africa operations. And we have a hub in India, which serves as the HQ for the Southeast Asia market. Next. I'll dive a little bit into how this technology covers all the areas that I've mentioned. First, we offer a durable biodigester. It has a 25-year use guarantee, easy to install. It takes only a day and a team of 2 to install. We have a diversity of sizes. Smallholder farmers range from someone who has 2 cows, and it could be to as many as 200 cows when we consider the large scale farmers. Our systems are modular, makes them easy to manufacture and transport across the world, and they are easy to maintain, which is our key selling point in collaboration with the farmers. Only the farmer needs to maintain their biodigester through proper training. There's no need to constantly look for a technician from Sistema.bio. So we do offer a full package service where we offer the standard package of the biodigester with the cooking points, and we offer a full range of training to the end user. And for the productive farmers, we are able to offer customized biogas appliances where they can, like water heaters and chaff cutters, but that is on a customized level depending on their energy needs. Next. Previous presenters have spoken about carbon credits and the quality of the carbon credits that are generated. So with a biodigester or not, with the organic waste available on the farm, there will be emission of methane, and methane is one of the strongest greenhouse gases. So what we do is we make sure that this organic matter is inside the biodigester itself, and then it's broken down and we capture that methane. Instead of it being released into the atmosphere, it's captured and piped to a kitchen where a family is able to cook using the biogas. And at the same time, they are able now to, they are able to generate their own gas. They get a clean and renewable source of energy. And from the biofertilizer that comes out from the other end of the biodigester, they are able to participate in regenerative agriculture, bring back health to other soils, and it's a complete cycle. This means they do not rely so much on firewood and charcoal, so there is less deforestation. This in the long term, this causes an increase in the forest cover, and therefore carbon sequestration happens directly to the soils. Next slide. I mentioned about the impact that we create. It's not just about selling a biodigester is not an end to itself, especially for an organization that wants to tap into the carbon markets. And this impact has to be measurable, one. Number two, it has to be verifiable by an independent body. Our impact has been strongly linked to 5 SDGs, that is SDG 2 for zero hunger, SDG 3 for good health, SDG 7 for affordable and clean energy, and SDG 13 for climate action. Next slide. I'll dive straight now into Sistema.bio's experience in the carbon market. From 2010, when the company was founded, we only tapped into the carbon markets in 2019. By this time, we did not have any in-house expertise on how to navigate the carbon market. We did not have a team. And in fact, it's only our CEO who knew how the carbon markets work. So it's been a very critical and important learning curve within the company itself, and also in collaboration with our partners, to get us up to speed and learn on various issues like registration. It's a very intense exercise, including making sure data that is verifiable and can be validated is available in our systems. That means we've had to align our operations, both the field operations and the support operations in the offices, to be in line with the kind of data collection, verification, and validation that is required in order to tap into the carbon market. That in 2021, we developed, first we tapped into the market in 2019, and in 2021, we developed a second carbon project, but this time managing the registration and certification internally. And in 2023, we registered a multi-country program under the gold standard. So Sistema.bio is a gold standard certified. And initially, we had to go with a pre-financing model. That means one of the presenters spoke about the ability to get pre-financed by an investor, and that means the guarantee is that in the payback from the credits generated, you'll pay back the investors. That way we were able to scale our operations and transfer the benefits of the credits generated directly to the end users, that is the farmers. Go to the next slide, please. Currently, I mentioned our 4 hubs of operation in previous slides. Currently, we have carbon programs running in Kenya, in India, in Mexico, in Uganda, and in Malawi. And the partners that we've worked with on this journey have been Native, Gold Standard, Infosys, South Pole, and ACT. Let's go to the next one. I mentioned a little bit about the challenges before. It's been a steep learning curve to the point where we now have a fully established internal carbon team that is able to give us feedback on how to structure our operations. But it's a fast moving market with a lot of iterations, so we have to make sure we are on top of the changes in terms of compliance as we move along. And that has also meant investing heavily in tools and platforms as well. Along the way with our partners, we've also managed to get assistance in terms of technical grants so that we are able to de-risk the initial work. One of the presenters from Open Capital spoke about a small company may need around between $100,000 to $500,000 to be able to tap into the market initially. So that has been our experience so far. And I think that's my last slide. Yeah, thank you.
Thanks so much, Madrin. That was very insightful. I also really liked how you explained, the journey of also building your internal capacities, because I think that's also something that Dennis spoke about in terms of, also implementation risk and how it's so important that a company or a project developer develops this capacities. So thank you so much. We'll now move to the panel discussion. So I'll invite all the speakers to turn on the cameras again. Thanks so much. Yeah, sorry, Madre, you have to come back. Thanks. So my first question that I would like to ask, and maybe I'll just ask it first to Madrin, because Sistema.bio really is, a first mover, really went through this journey, is, well, now, speaking about all the different trends and the challenges, opportunities, but where really do you see the carbon market go next? What are the trends you're observing? And most importantly, what would you advise a first timer entering the market or having a willingness to enter the market? So I'll start with Madrin, if you want to speak on that.
Yes, I can speak on that. I can't remember which presenter said the demand currently is higher than the supply. There is oh yeah, great, it's Ryan. There's been a lot of talk about a collapse in the carbon market, but I do not foresee a situation where globally everyone decides we do not care anymore about the environment, about climate. Let's emit and operate in a way where there are no rules and regulations and guidelines. So I see great potential for growth moving forward. Where I'll see changes coming in is regulations could become a bit more strict in terms of how are the credits generated and how are they measured, how is reporting done. What Nikki mentioned, what CAVEX is doing, there is going to be more reliance on AI so that we can actually get actionable and verifiable data. To anyone or any organization that wants to tap into this, in a nutshell, I'd say go for it. But it's not a quick win scheme where you're looking for easy capital, easy money, jump into it, and within 6 months you're good to go. It requires resilience. It requires long-term planning. It requires identifying the right partners to work with in this market. There has been a bit of a downside and some conversation about greenwashing. You have to be careful and make sure that you are working with the right partners and you're on the right path. So I'll say a lot of potential, maybe more strict regulations, but yeah, the future looks good.
Thanks so much. I see most of the panelists nodding, so let's see if they have anything to add. I saw Nicole and Rai nodding. So maybe Nicole, you want to also answer the question?
Yeah, no, I think I agree with Madrin. I think, there is a lot of potential. I think it's still a relatively nascent market in how we understand not only the academics of it, if you will, the quantification, the assessment, but also in the market dynamics. So speaking with my financier hat on, that is a key issue for lenders and for people wanting to support developers. But I think, we are at the very, maybe not just the beginning of it, but certainly not mainstreaming yet. And I think there's a lot of learnings that need to happen, a lot of things we need to get right. Regulation, it's going to be changing for some time, I believe, as countries impose different policies. So I do think that it's a journey, and for any developer considering, I do think there's value in additional revenues to business models, absolutely. But again, yeah, I think partnering with the right companies, the right people, the right advising to navigate these markets is going to be crucial, because it's not going to be a smooth sailing for the tenor of the project.
Thanks. Ryan, any further additions or reflections?
No, I think this is very much aligned with what Madrin and Nicole have shared. I think an interesting thing that was highlighted was the increased use of AI. And I think it would be very interesting to see how specifically it's used in terms of validating the methodologies that a lot of companies are coming up with to validate the carbon credits that they have. An interesting dynamic that I hope will continue to grow is a lot of these businesses asking for a lot more from their partners, especially in terms of awareness about the voluntary carbon credits markets and support in helping them understand those technicalities. So they don't want to go in completely green, and they want somebody who's able to add value in terms of either helping them in their validation or actually in terms of actually accessing that ready market. So it will be interesting to see just how they demand for a lot more support rather than just focusing on just pure financing or investments.
Thanks a lot. Then indeed, we already mentioned it a bit. Madrin already mentioned as well, the issue of greenwashing or overcrediting due to use of unrealistic baseline assumptions. I would say the disadvantages sometimes of field verification. So maybe Nikki, can you speak a bit more about how CAVEX indeed is trying to address these issues, and what other opportunities are there to assure quality carbon credits?
Absolutely. Thanks, Carlene. And it really fantastic to hear, Madrin, all of the work that Sistema is doing, kind of being a front leader in this space, because it's not easy to be, the first mover around these markets as they're figuring themselves out. But I think that the operative word, completely agree with Nicole, is that we are learning, and we learn better with more data. We learn by observing, quantifying, understanding, and really getting into the depths around how that baseline has been calculated, and then trying to get as much data as you possibly can that covers that usage area, whether it's kind of all of the biodigesters or all of the cook stoves or all of that surface area. So I think it's really exciting, actually, because with some of the costs around remote sensing technologies, GSM enablement, with some of the emerging ways that we can capture data down to end beneficiary level, it brings down the costs, and so it allows more people to access, and then more data for us to kind of analyze. I'll be completely honest, though, for our CAVEX team, I mean, we know that we have more learning to go getting into this space, because what we're really trying to do is build upon all of the rigor and robustness that has been stood up in the market today by bringing digitization into it and driving more efficiencies through that. But I think that it was great to hear people talk about partnerships and collaboration, because I think that the more we share these findings out very transparently, openly, and allow everyone to piggyback on the back of them, that helps drive the markets forward and build trust collectively across the piece. But yeah, that would be our, kind of the more data that we can build accurate learning models against. We're also huge fans of the movement towards, global reference data sets that can help us look at comparative analytics around issuance, pools, baselines, think more in a more sophisticated manner around the construct of those baselines as it relates to rural versus urban populations, different countries. And so I think there's only potential. I completely agree with the excitement and growth around the market, and there's only potential to improve it and learn more.
Thanks, Nikki. And I'm also curious to hear from Dennis how SunFunder, I would say, engages with these type of concerns, and also going forward, how you will approach this.
Yeah, so I'll speak about SunFunder internally, but also as part of a key stakeholder in the whole chain, because we can't do everything alone, and it's a sector kind of systemic kind of approach that we have to look at some of the issues that are affecting the carbon markets, especially on the voluntary carbon market. So internally, definitely, there's a whole team who work on the quality assurance for each of the specific projects, but also what we have on the portfolio, what we will have, and also they are able to advise key methodologies, so be it gold standard, Vera, on what are the most realistic ways to collect data, what makes sense, and etc. So, but mostly at a systemic, I would say, level is we do realize that for sure there is, as much as the carbon markets has been learning, there's definitely been gaps, be it on the methodologies, be it on the implementing. There are gaps that have to be addressed for there to be one integrity in for someone who is buying the credits, to know that a ton is a real ton and it's not something that has been made up in a village somewhere. And that takes a lot of, I would say, openness and work and collaborative efforts that needs to be done. So at least we know, for example, within SunFunder, we are part of the project development forum, where we do liaise with, for example, UNFCCC on factors around FNRV values, on factors around baseline caps on that should be used when you're monitoring. But also it's something that I would say the positive of having that level of criticism and scrutiny within the voluntary carbon market has helped everyone within the stakeholder, within everyone, to really think through what is mostly important. Actually, is the climate and the impact that you're providing, and all these, and the science has to be backed. So everyone has to kind of come together and think about what is the best way to achieve this, and to see the different methodologies and even the countries to try and solve this one big piece of the problem. And even within everyone with this panel, they are playing a different part of it. So I think that we still have a long way to go, because as the climate is changing, we are getting better at science, especially now on the science aspect of it, as Nicole did mention. And we are able not just, for example, to measure targets based on academia, but based on science. And those are science-based targets that could be able to back. So we are definitely getting better at measuring and having really high integrity projects across the sector, but also now more and more leveraging on technology, not just manual processes, and having those learnings coming back to improve the different standards and the different methodologies. So, for example, we have the government. We also know like a company who's pioneering e-cooking, ATEC, who have essentially piloted a new methodology. So it's real time, and that should be the future, where everything is transparent. There's still a lot of work that needs to be done, for sure, and we have to be cognizant of that. But everyone within the space must have the willingness and the openness to be transparent to get to that. And that is something that I say it's a positive thing, being criticized for that, and it's helped the whole sector to kind of take a step back and really have some self-reflection on what are the key loopholes. And it's not just sufficient to say that, yes, we've complied by the methodology, but then again, what are you doing more than what is just the methodology to make sure that you have high integrity in terms of your project? So that is something, and definitely we'll get there. And the opportunity also is just now going into now moving to compliance market is essentially we are being forced to do this, and there are more regulation and transparency that is coming, especially with Article 6 in Africa. So the opportunity is still there. And as policy and regulations are being put, they are being geared towards this transparency and being able for a project developer like Sistema.bio to know that by the time they are embarking on a project in Ghana or Tanzania, the selling price that the person who's going to buy is at this particular price. And these are the steps that are there. There's nothing ambiguous in between. And it's a big opportunity for up and coming developers that definitely with the compliance market, be it on Article 6.2 or with COSIA, the demand will be there and the transaction and the prices will be much better. So it's someone that I think have to kind of take that. Yeah.
Thanks. Sorry, yeah, we have a lot of questions from the audience and only little time left. I had so many other questions for you, but let me prioritize the audience questions. So let's see how many we can take. I have a few questions for Nicole. Nicole, so the question is: Are you only focusing on mini grid developers in Africa? And another question is: given the research findings, how can the voluntary carbon market fulfill its original intent to channel funds from developed to developing countries to support the low carbon transitions? It seems a seismic shift is needed.
Yeah, no, absolutely. So just to answer the first question, yes, we're focusing on mini grid developers only in Africa. That's our core market, and that's what we intend to solve. We are indeed lenders to mini grid developers across the continent as well. And not only that, but I do believe that there's regulatory constraints around how you can cross-sell across jurisdictions where the carbon credits are issued and where they're being sold to. So that would be very much in the continent. And the second question is how you can transfer the benefit. What was it, sorry, Karin? The benefit from carbon issues in the developed markets? Is that what the question was? Sorry.
Yeah. How can the voluntary carbon market fulfill its original intent to channel funds from the developed to the developing countries?
Yeah, well, I think
findings.
Yeah, no, I mean, that's what we are, that's our intent with this aggregator, right? Is to catalyze via blended facility investors globally. We are looking for not only concessionary capital from donors, but we are also looking for commercial investors that see the appetite, see the potential of the carbon market, and they want to play in. I think there's, an element that to Dennis' point earlier and to everyone's point, acknowledging that we need to, be able to certify the quality of the credits being issued and be able to remove that as a risk factor from the equation, so that lenders, investors, any financier wanting to tap in this market can do so confidently. I think that's really, really the key, and market maturity. But I think that's the intent, and that's certainly what we are trying to achieve with the platform.
Thank you. Then I have a question for Madrin. Have you experienced how digitalization of the shareholder farmer ecosystem aids carbon trading validation and transparency? At what level do you onboard such a farmer's ecosystem?
Sorry, the question was long. I didn't.
I know it was quite long. I think the question, how I interpret it, is how digitalization can support carbon trading validation and transparency. So I think it talks about kind of the move from, the field verification, doing manual, or I guess manual. It's basically based on field verification rather than digitalization. So what is the role in digitalization in terms of supporting validation and transparency? And I think it's related as well to how is it implemented at the farmer level as well?
If I'm to tackle on how it's implemented at the farmer level, how we are currently doing it at Sistema.bio, we've installed smart meters that are able to, smart meters at the point of use, that is where the biodigester is installed at each farmer's home, which are able to monitor the gas production and the gas use in each home and report on an on-time basis. And from the back end, we are able to monitor that curve from day on day, month on month, compared to currently what we do now, which is collect baseline data from day 0, and we have to go back over and over again and collect this data manually. And it's a process that it takes a whole year to be able to collect that data from the baseline point to when we are confident to submit this data, and now the whole verification and validation process starts. So in 2 ways, I'd say it will create a platform where you're getting real-time information. So the truth of what we are reporting is solid now, almost 100%. And to the companies that want to get into the carbon market, I think it would be great for managing OPEX. You don't have to go back to the field over and over again to collect this data manually. And a benefit to the end user is that we can also be able to remotely, we can recognize when there's a problem at the point of use. Even before the customer calls and says, I think I have a problem, if on the monitoring point I see there's no gas production and gas use going on, we are able to catch these things early on.
Thanks a lot. Yeah, it indeed seems that the shift to digitalization has many co-benefits as well, not only catering to carbon projects. So there's actually much more questions. However, time is up, unfortunately, and I don't want to keep our speakers any longer because they've been so kind to stay on for so long. So with that, I just want to thank you a lot for your contributions. I'm sure that anyone who still has questions, you can contact me or us, the EEP Africa program at cfp@eepafrica.org. We're also happy to connect you with some of the specific speakers if necessary. So apologies if your question wasn't discussed. But yeah, please also go to our website. Again, we'll soon open a new call for proposals for the EEP Africa program starting in February 19. So for more information, please visit the website. So for now, thank you so much. Have a good day.
Thank
Bye,
you very
everyone.
much.
Thank you. Bye.
Bye.
Thanks, everyone.